Welcome to Top's Trade of the Week. Last week, due to Easter, was a short week, so I actually didn't look at the markets at all. So there wasn't a trade of the week. But this week, we had a couple of great opportunities from which I chose one. So on this chart, the reference frame, you can see that prices had been closing above the moving average, which was clearly pointing up. So I moved to my trigger chart. In this case, I was trading on the 5,000 volume chart. Now here on this chart, you notice that I have a clear pullback with a red arrow, red bars, and a red moving average. So all I needed to do now was to wait for a buy signal. And the buy signal came a few bars later, and it was kind of fast. So with the moving average on the reference frame so steeply up, I didn't want to miss the entry. So I placed an order to buy 3 ES contracts at 29.16.25. My order was filled immediately and I placed my stop at 29.12.25. Now that was a 4-point stop, which is very acceptable for my psychology and risk tolerance. Since the trend was so well established to the upside, based on the reference frame and the steepness of the weighted moving average, I decided to put my first target at 2 points from my entry. So I placed an order to sell 1 contract at 29.18.25. And it took less than a couple of minutes to get filled, so I raised 1 stop to 2 points below my entry. That way I could lower the risk to only 1 contract because the second contract would lose nothing. So now I had 2 points of profit, 1 stop risking 2 points, and the third stop now at 29.12.75, still risking 3.5 points. As you can see here, prices continued moving up. At this point, both my stops were at 29.15.50. I was only risking 3 ticks for each contract for a total of 6 ticks. However, my position was in danger because, as you can see here, I had a red arrow and red bars. However, I had taken 8 ticks for my first position. So if I were stopped out at this point, I would lose 6 ticks, but I already had the 8 ticks of profit from my first contract. So in the worst case scenario, this trade would have been a scratch. Now if I'm not stopped out, then I may have the chance to add to my position here when another buy signal appears. And as you can see, the chance to add to my position came 2 bars later. I had another green arrow, green bars, and the moving average was still green, and the SAR was still below the bar. So I placed a buy stop at 29.19.25. I figured that if prices managed to break that previous resistance, they should then move a lot higher. My stop was now at break even, but I was unwilling to lose my profits now and added only 1 contract instead of a full position. So my position was filled, and since the SAR was already close to the low of the bars, I decided to start trailing the stops in the following manner. 2 stops, 5 or 6 ticks below the moving average, and 1 stop at the SAR. My average entry now was at 29.17. And things kept looking good. One of my stops was already at 29.20.50, locking in 3.5 more points. And the other 2 stops were at 29.18 with 1 more point of profit secured. On this chart, you can see how one of my stops was taken at 29.21 with 4 points of profit. The other 2 stops were still at 29.18.25. And now I got another buy signal, so I placed an order to buy another contract at 29.22. My stop for the previous 2 contracts was now at 29.18.50, so I had nothing to lose and everything to win now. And my order was filled, and I placed my stop at 29.20 with the SAR. I again have a full position with 3 contracts at an average of 29.18. Unfortunately here, my stop at 29.20 was taken. My other 2 stops were now at 29.19. Now on this chart you can see that I got another buy signal that allowed me the opportunity to add back the contract that was just stopped out. But at this point, I was more concerned about not being stopped out of my full position. As you can see here, notice how the rallies had become smaller, which alerted me not to risk more. So I decided against adding, and instead I wanted to lock in more profits rather than adding more risk. And as you can see, I'm glad I didn't add. My stop was now at 29.20.50, and it looked like it was going to stop my two runners. A couple of minutes later, I was indeed stopped out at 29.20.50, with a total profit of $512.50. Looking back, I recognized that this was not such a great trade. It was rather a small winner. But it gave me the opportunity to show you how I was adding and when, and also why I decided not to add any more. The steepness of the moving average on the reference frame had given me great hopes for a long rally, and so I was looking to scale in several positions, but it didn't work out as nicely as expected. Now I hope this trade gives you a good example of how to add with confidence and when to think twice. See you next week.